While Canadians brace for the deal-making with the new U.S. administration, TD Economics put out a report called Setting the Record Straight, where they highlight that Canada is the #1 export market for U.S. goods and services. We have the second smallest trade deficit of U.S. trading partners, and we are a critical partner in oil, critical minerals, and tourism. Here to flesh it out, Marc Ercolao from TD Economics to show us a few charts and educate us along the way. So nice to have you here.
Thanks for having me.
Okay, so I want to start off with, you've got a story that you build through in your report, taking the reader through some charts and what are important. Yep. The first one, if we can bring that up, gives the beginning of the story, the overview of our trading relationship. But we are the #1 destination for U.S. exports.
That's right, and it's important to note, Canada and the U.S. have always shared a pretty robust trading relationship, one of the largest bilateral trading relationships in the world. As far as an export market, that is right, Canada is the #1 export market for U.S. goods and services. With the 2024 data that we do have, that's looked at around $350 billion so far this year. With the exception of Mexico, that's about 2 to 5 times more than most other major U.S. trading partners. Yeah,
significant. Okay. The next chart, and again, you're taking me along on this journey. We're going to bring this one up and tell us what we're looking at here. This is showing us goods and services, but just explain maybe what's above the line and below the line and what that signifies.
Yeah, so first from a high level, we do have a trade surplus with the U.S. And as you can see with the green area of the chart, that it is mainly in a goods trade balance and focused in energy. What's often overlooked is the services side. It is a smaller component of overall trade, but for many years, the U.S. has enjoyed a surplus with Canada on the services side, and that is mainly drawn from Canadian tourism and flow of dollars from Canadians to the south side of the border.
Okay, so again, we have the surplus, but let's take a look at that contextually with the other trading partners, which is your next chart. So bring this one up. We have, will you tell me, what does this show us?
Well, this is very important because yes, there is a fact that exists right now, is that the U.S. has a deficit with Canada. But if we compare that across major trading partners, we can see that Canada only accounts for 4% of the total U.S. deficit. So in theory, if you were to wipe out the trade balance, make trade even between Canada and the U.S., it doesn't really move the needle in terms of where the U.S. stands in their total trade picture with the rest of the world. All to say, when you take Canada's trade surplus with the U.S. right now, it only accounts for maybe 0.1 to 0.2% of American GDP, which is a very small figure.
I think that last chart is important. I actually really like this one because it's the nature of what is the goods that are going, so to speak, over the border. And if we bring this up, take some time on this one because I love this one.
Yeah, as the chart shows, it is our entire trade surplus with the U.S. is entirely driven by energies trade. And that's been around for a while. Canada is a massive supplier, especially of crude oil to the U.S. that they use in their refinery inputs for final domestic consumption. And Canada has allowed U.S. to have a reliable and affordable source of energy, and that's where that deficit comes from. But if you strip that out of the equation, we can see that across most other industries that they do carry a surplus with us. And I think that's important to note that, when we look at this two-way trade flow, it really isn't lopsided. We both benefit from having, such an integrated trading structure.
Yeah, but backing out energy, we buy more than we sell, and that's kind of
exactly.
that's something that is important.
Exactly.
When you look at the auto sector, you had some interesting numbers in there as well, and President Trump has said, maybe he'd rather have cars fully built in Detroit or on American soil, but that's not something you can just snap your fingers and make happen.
And you're correct about that. And on the autos, that is one sector that over the last, I think, 3 years or so, the U.S. has carried a surplus with that. So they do export more to us in the auto space. Trump has said that Canada creates 20% of the cars they consume. That is a bit of an over-exaggeration. It's closer to 10%. It's still something. It equates to about 1.5 million units. But to fully reshore that, U.S. would presumably have to increase production by, 10% overnight. They'd have to expand their capacity. We estimate somewhere around, 6 brand new processing and production facilities.
And the integration. Right?
And that's the integration. That's time and money. But even aside from just the production, the U.S. consumer enjoys variety. Currently, they consume over 320 different models of vehicles, where the U.S. only produces about I think it's around 120. So there's a huge gap there in terms of satisfying the need for U.S. consumers and the choice that they want. So it's sort of two-pronged here, and any attempt to fully reshore would take a lot of time and a lot of money.
I want to bring up this one last chart because you bring it at the end of your report. You talk about critical minerals, and I think that's something that we didn't talk a lot about. I'd say in the media probably up until about last year or 18 months ago. But this just highlights here that there is some reliance on the United States. Sorry, there's reliance on Canada to the United States on some of those critical minerals.
Yeah, so the U.S. has a list of 50 considered important critical minerals for the U.S. economy for over the next several years. It is important to note China still dominates that space in terms of production and exporting to the U.S. But Canada is becoming, they're a small player, but they're becoming more important. And as the chart shows, for certain critical minerals, we supply anywhere between 50 and 80% of the needs of consumption. And it's not limited to those. We do also produce and export other critical minerals, maybe not to the same degree, but this is all to say as the U.S. attempts to shift trade away from China, that Canada really stands out as an opportunity to grow in the critical mineral trade space.
Last question for you. President Trump talks about how the United States subsidizes Canada to the tune of $200 billion. Where does that number come from?
We tried to splice and dice and see where that $200 billion figure might come from. Important to note that he at first was referencing trade deficits as subsidization. A deficit is not a subsidization. It's not like the U.S. just hands us money out of goodwill. They receive quality goods and services in exchange. But if you even do take the deficit as a proxy, that's still 4 or 5 times less than that $200 billion figure. Other signs would lead us to think that he might be talking about Canada's lack of defense spending, in which we're falling short of our NATO commitments of defense spending of 2% of GDP.
So it's not a trade number.
It's not a trade number.
He's seeing it somewhere else. Yeah.
Correct. And even if you account in the around $40 billion shortfall that Canada, it isn't spending, and tack that onto the trade deficit, we're still at about not even half of that $200 billion number. So we're going to continue to comb through the headlines, see if there's any more substance around that $200 billion. But for now, one, we would say it's not a subsidy in the first place, and two, we'd say that both sides are benefiting from the current trade arrangements that we have.